Good evening. Welcome to Online Investing Channel. Let me share the good news that the number of recovery cases of COVID globally is improving from yesterday. It has improved today to a level of more than 22,000 cases from yesterday. Today, as of now, we have close to 18,000 recovery cases, and the new cases are flattening, especially in the major USA and Europe countries, and others are controlling, thanks to the valuable support by the Indian government to control it by extending the lockdown for another 18 days. Thanks, my dear friends. Now, let us come to our power of investment online. Today, I wanted to tell you a small brief, my dear friends, why I am talking about the power of compounding in equity as an investment asset class, and how do we move the asset classes time to time, and what is the reason. Let me take a small nutshell about this study. You know very well the cost of living, which you call inflation, as it's increasing year on year by 5 to 6% in the name of food, medical, or education, which is 8%. There is no point in keeping your investment, which is giving you 7 or 8%. That means net you have income, your investment has not given you any returns over a period of 10 years. It will not be of any use for you holding it for your future of your retirement. Yes, that is the reason we request our investors to time move the money from equity to debt, that is your fixed money, and from debt to gold at times of major corrections. Yes, my dear friends, let me tell you a small message. What is called major correction? There is a famous study has been done for last 500 years by the famous W.T. Gyan time study, which has been established for 150 years of chart prediction, and the famous Elliott wave theory, which has been established, followed by the great Warren Buffett and every investors globally. That says we live in a small sun cycle of 500 years, and take a small part as 90 years is one sun cycle subset, which gives you 10 years of a cycle sub-cycle in it. We have seen last 90 years, that is 1929, the major depression, which was 80% of equity correction, and today 2020, 2019, 90 years we have completed, which we have seen close to 8 to 9 major recessions in the market in different forms. World War I, World War II, the recent 1988, 1995 corrections globally, 2000 dot-com bubble, 2008 the Lehman Brothers crisis, financial crisis. We have seen the market has made corrections year on year, but overall, if you see the last 30 to 50 years in India, the only equity has given you 18% to 12% CAGR, that is a compounded annual growth of your investment year on year in these stocks over the last 30 years. Yes, my dear, from your Sensex from 100 to 200 has moved to 40,000 to 50,000, it will reach 1 lakh. Your Nifty from 500, 300, it has reached 12,500. Yes, that is the reason we requested our clients to invest money in equity for a longer term and book profits also. Yes, we have advised our clients in 2018 to move the money in the Nifty from 11,500 to 12,000. At 2019 peak also around 12,400, we advised to book profits in equity and move the money to gold as a safe haven investment at times of crisis or emergency. Yes, my dear friend, gold has not been looked as an asset class for a longer term. It can be used as a safe emergency class to keep your liquid money, because when the interest rates had been reduced to close to zero by the central governments like US, in China it is close to 3.4%, and even in India we have moved from 7-8% to 400% interest rate. In Japan, surprisingly, it is at minus 0.25 if you keep the money at bank. So the money, when it is moved from 2.5 to 3% from US to 0.25, the safest asset class will become equity. I'll explain you why. But gold, traditionally land has been only investment asset class for all of us like developing countries in India. Yes, gold has given you returns from 300 400 rupees in 80s to 50 rupees from 70s to 5000 because our Indian rupee has depreciated against the dollar on an average of 10 to 15% year on year for the last 50 years consistently. Yes, my dear, our Indian rupee was equivalent to 1 rupee to equivalent to dollar in 1900, and today it is at 69 to 77 it has reached. That has depreciated and your gold value has appreciated because the gold is traded and purchased in dollar terms. The gold has appreciated from $300 $200 to the peak of $2,000, and now from 1250 because of this crisis and recession and during wartime it peaks. It can go maximum of $1950. That is, in India also we advise our client to start investing from 2800 3000 rupees. It has reached 4500. You may ask when to book profits. Yes, around 4800 5000 to the maximum 5500. Book profits at gold and move your money to debt, that is in fixed deposits or liquid funds, and start your investment in equity. Yes, my dear friends, you may be asking why equity at times of recession. The best of the best investments had been made major only during this major correction, because these quality stocks which we discussed yesterday in our channel, the major sector as we mentioned, both your FMCG, pharma, IT, bank, metals and infrastructure companies have given this bluest of the blue chip stocks, the best managed companies have given 15 to 18% returns, equity investment return year on year from 2000 to 2008. From 2008 and 9 people have invested, it has given 2019, it has still given 18% return to 12% minimum return year on year stocks. And these stocks are available at a very attractive valuation of 40 to 60% at a discounted pricing. As I mentioned, let me take the opportunity to reiterate the stock FMCG, which has always been a blue chip and evergreen at times of recession because nobody stops consuming. So that is where your food, your pharma and the technology IT becomes inevitable at times of crisis or in times of even financial crisis. We use it, we tend to use it, we don't stop. It is not a luxury. So keep your money invested in the major large cap company which is the best of the best globally, MNC of MNC companies like Hindustan Unilever, which is inevitable today in our life. You may ask the question, how long we need to invest in equity? As long as we live, human being, we breathe, we eat, we drink, we use technology, this equity keep giving you returns year on year for your lifetime. So invest in stocks for your lifetime, for your grandchildren, not for a short term. Yes, my dear friends, once again, invest in this bluest of blue chip, Hindustan Unilever, Colgate, Dauber, ITC and Marico as FMCG, and the pharma best will be the Sun, Biocon, Davis Labs, Cipla stocks, and the banking will be once again the HDFC Twins, HDFC Bank and HDFC Limited, Kotak, ICICI, Axis, and even IndusInd should be in your portfolio. And last but not the least, once again IT, Infosys, TCS as a favorite blue chip stocks. With add-on, you can add HCL Tech and Tech Mahindra can be added with Wipro. Nevertheless, to miss metals and infrastructure should be also in portfolio, which is available at a very, very attractive 80% discounted stocks like Vedanta, JSW Steel, NMDC, SAIL, Tata Steel, and the infrastructure company like Adani Ports, cement stocks, Ultratech, ACC are available at a very attractive pricing, my dear friends. So once again, to reiterate, as we mentioned yesterday, yes, Nifty, we advised to buy above 8,900, 9,000 at the dips. It has reached today 9,300, which is close to 3% from yesterday as discussed. The market is once again retracing from the bottom of 7,500 Nifty to 9,500. Max it can go 10,000. Book your profits, my dear friends. Whichever accumulated stock, book your profits and wait for corrections to come. For the next 3 to 6 months, market will be on a sideways as we mentioned, and the corrections will happen at every dip above 8,000 to 8,500 Nifty. When it stays back, keep investing in these quality stocks for a longer term correction. I hope you enjoyed this video. Please subscribe to our channel and keep watching for continuous updates. Just an update again, the black gold, which is called oil, which is the crude oil globally, which is also corrected 66% and it is taking a bottom. It can go even at $12 to $15 to $20. This is the opportunity where equities also will make a correction globally, and it is the golden opportunity for investors to move your money from gold, book profits partially 10-20% at profits, book profits, move the money to debt, that is your bonds and deposits, and from there move your money and SIP, systematic investment planning of stocks in these blue chip shares only for a longer term. Thank you, my dear friends. I hope you enjoyed the video. Give your comments and add any views to be taken. Thank you. Bye.